Moving Iron Podcast is proud to be part of the Global Ag Network. The network is live, so check out globalagnetwork.com for more details and updates. Now on to the show.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Good morning and welcome to Moving Iron Podcast Markets with Chip Nellinger. Chip, how you doing this morning?
Hey, doing well. How you doing, Casey?
Not too bad. So we have got a lot of stuff happening right now. So this week, last few weeks, we've lost about everything we've had. And this week, we've kind of been on the rebound a little bit. Looks like there's been some positive news out there that kind of relates back to what's going on. Maybe some people are actually starting to kind of get a grip on reality a little bit as to what the crop condition looks like. And then Monday, we got that big WASDE report coming out. And that's going to be a, trendsetter for what happens for the rest of the year, probably up to that January report. So talk about what's happening out there right now, Chip.
Definitely a trendsetter. This thing is kind of unprecedented. Acreage resurvey. They've done one of these, I don't know when it was, maybe 2013, another late year, but nothing like this year. So they changed the way they're going to do it a little bit. It leads to kind of confusion. It's unprecedented. We don't know what they're going to come up with. You're going to use satellite imagery. They're going to visually look at actual fields. They're going to then try to incorporate some preliminary FSA prevent plant data. We're also going to get the first FSA prevent plant data dump on Monday at the same time. That's unprecedented that they come out with that during market hours at 11 a.m. Central. So the market, literally, I've never seen a report that opinions are so far apart. This is no exaggeration. 10 million acres low to high on what they expect with corn acres. So what that says is somebody's probably going to be shocked in this deal. There's probably going to be massive amount of volatility. And I think you hit the nail on the head. This is going to really set the stage for, the rest of summer and going into fall and even setting us up into winter. So it's a very important report. On top of that, we are in the midst right here, basically from the eastern third of Iowa in through central Illinois and on in through northern and central Indiana of a real dry stretch here. Fortunately, it hasn't been as hot as it normally gets in August. We're in the mid to upper 80s, maybe touching 90, but it is dry. And I mean dry like 3 to 4 tenths, basically half of an inch or less since July 4th in many of those areas I just mentioned. So corn is, obviously late this year. So you've got a lot of corn that's pollinating and, just getting into, grain fill. And so it's an important time frame. And nobody knows about yield. That's going to take a couple, several more reports to kind of figure out. But we are racing into Monday, and all eyes are on the acreage number. And if anyone tells you they know what the USDA is going to say, you better run away from them because it is a total wild card.
Yeah, no, I've been reading reports and looking at articles and stuff like that, and I've heard everything from 92 million acres got planted to 78 million acres got planted.
Yeah.
I mean, that's a huge swing and stuff. And when that actually comes out, especially this year when they're going to actually use science, all the technology out there they can use to figure out what that actual planned report is, it's probably going to be more accurate now than it's been ever in the history of them doing this report. So I'm looking forward to see what happens. And whatever happens one way or the other, it's going to be one extreme or another. There's not going to be just because nobody's guessing. There's nothing baked into this yet. So it's going to be interesting to see what happens.
Yeah, that's right. And that's why I think we've seen a little bit of a rally here. Number one, the dry weather. And it is affecting things. It's hard. It's really hard for the market to figure that out. Like what's going on out in the field. It's just really a year. Let's hope we don't have many more years like this. It's really unprecedented. And it's really hard for the market to figure out what's going on out in the field and where are we at in maturity. There's, stuff that was planted in early May. There's stuff that was planted the last 10 days of June, everywhere in between. So it is just, it's kind of a nightmare scenario. But like you said, hopefully we get a little guidance on at least the acreage side of this. I'm hoping that it can kind of put to bed some of the questions, and that we're not scratching our heads at 11:30 next Monday thinking what just happened, and have more questions than answers. Like you said, it's going to be pretty thorough. Using some technology with satellite imagery as well as visual on the ground checks, and then kind of cross-referencing that hopefully with some FSA data. They don't have all the numbers, but they would go, I would think they would have a lot of it. So it's going to be one for the record books once we get that out of the way, and at least get one piece of the puzzle a little more, solidified, hopefully.
And on top of that, is it next week or the week after next? Pro Farmer does their corn tour. So on top of that, so that's going to even level some more, make that even more solid across the board when you start looking at true actual data that's out there.
Yeah, I believe that's a week after that Pro Farmer does that. And the market will be hanging on that. They always hang on that every year. It's an important crop tour. Just from the standpoint of they do it the same time every year. They go the same routes every year. And they certainly don't cover the, entire corn belt by any stretch, but it's consistent. And so the market really watches that. They'll be looking for information, daily from that. And now with Twitter, you get, kind of up to the minute, tweets on that. I went on that 3 years ago, and it's an in-depth process. So that will be something that's coming out here. And, weather also is getting critical. There's not a lot of rain in the forecast here for this Eastern Corn Belt where it's the driest. So, it's getting really critical, and there's just no question that if we don't start getting some rain, it's going to take us backwards. We're going to start seeing tip back. You're going to start seeing, even issues on the beans. Beans like some dry weather, but I don't know. I mean, it's a scary deal. I mean, I just continue to drive by bean fields in Illinois. Some of them aren't going to close the rows. I mean, you see dirt down the rows still, and they're knee high, and they just look like they haven't grown for a long time. So I just can't scratch my head wondering how good these beans can be. And it's not a small area that they're like that. It is the better part of Illinois and Indiana that I've seen. I haven't really been out of that area this summer, but Illinois and Indiana bean fields really are making me scratch my head wondering how good can these beans be.
Yeah, that's the other thing. So 2 weeks ago when I met you in Peoria, and we had our little rundown together there, I drove from Scottsbluff all the way across Nebraska, all the way across Iowa, and then middle of Illinois there, and the corn was as different stages. I mean, depending on when it got planted. One side of the road was 6 foot tall, fully tasseled corn, and then right across the way was knee high corn or waist high corn that looked like it got planted. Looked like it was about 1st of May. And then you start turning around and look at the beans. That was the one thing I saw. Every bean field that I went by, they looked all the same. There was nothing too robust about them. They looked very young. Some looked stressed, some didn't. But there's a kind of a perfect storm here with the amount of rain that came through this spring during planting season, and the root systems didn't get deep like they would normally get, and they're all kind of shallow now. And then it turns off hot where we're seeing the stuff we're seeing now, and that it could be some issues. But the one thing I've noticed about the market here of late, the soybean market has taken a back seat to the corn market. And I don't know the last time I actually heard someone talk about soybeans in depth. So talk about the soybean market and what you see happening there. And it just seems like it's just kind of there and nobody knows what to do with it.
Yeah, I think that's a good way of putting it. And I agree 100%. So we're so focused right now, especially on beans, but to a certain extent on corn, on the demand side, right? And this trade war has escalated, and it kind of looks like it's morphed into a currency war.
Right.
And so China's, saying, okay, we're done with you. We're going to take what we've, committed to it up to this point, but we're not buying any more agricultural goods from the United States. And so that hits the bean market, right? And corn to a lesser extent. Demand, there is an issue on that. I'll be first to admit our exports aren't very good in corn, and they're abysmal in beans. And so the market's focused on the demand side, but it quietly forgets about the other half of the equation, and that's the supply side. And if you overlay a map of where it was the wettest this spring with where the driest there, it's like perfectly coincide. It just lays over. Where it's the driest right now was where it was the wettest this spring. That's the worst combination you can have. Mud a crop in terrible conditions. I mean, terrible meaning, you've heard the stories and seen the pictures on Twitter. Planters getting stuck, buried. You haven't, literally had producers pulling the planter tractor with a chain and another tractor to get it through the field. And now you've turned off dry in those areas. And the market just really is forgetting that with the right scenario, if you see much of a cut in acreage on corn and then eventually see yields, 3, 4, 5 bushels lower, you can theoretically make a case you could just whack 800 million to 1 billion bushels off a corn carryout. Now that's going to be offset with lower demand, but my point is the supply side quickly overwhelms the demand side. Same thing on beans. We're focused on China's not buying any beans, but I tell you what, you take 4 or 5 bushels off of bean yields, which in my mind is very possible. Especially if we don't start getting rain real quickly in the Eastern Corn Belt, the supply side overwhelms the cut in demand. Eventually, and here's in the back of my mind as well, this trade war's escalated, right? We're going to ramp up tariffs. They're going to, China's going to let their currency devalue against the dollar. This thing probably is going to it's probably going to speed up the process of which we get some sort of an agreement. Here just this morning, there was an inflation reading out of China. So like their food inflation's up. I think it was a record amount, like 9%. They have a little bit of social unrest there in Hong Kong. That is the last thing that the Communist Party in China wants. If you read a history book, the one thing they want is stable food and happy citizens. Yeah. And when you get the combination of, unhappy citizens and can't get food or have to pay, too much for food, bad combination for a centralized communist government. Yeah. So, the pressure may be on them to, even though they're posturing that they're in it for the long haul and they're going to, fire back. The conditions are there to get some sort of an agreement. And then no one's counting on that, right? So you just got a lot of things here with what's going on in the field, potential yield cuts. We don't know where acreage is. If we get a trade, agreement at some point in here, you can just wave a magic wand and literally with a tweet or, overnight change the name of the game in this thing. And in the bean market, especially, no one is prepared for that. The funds are still short a big amount, not massive, not record, but 55, 60,000 contracts. You get them saying, oh, okay, now beans might have some upside. Let's get out of our shorts. Let's get long. And you put $1.50 on beans in a heartbeat if you get the right conditions. That's a big if, but one of the conditions may be in the process of, like you said, being played out right now. And that's just production. I mean, it's hard for me to fathom how beans can be very good given, where they're at. And I was doing, not to get too long-winded here, they put out for years and years and years the Vegetative Health Index and the maps. And if you compare this year to 2012, everybody's saying like, well, it hasn't been that hot and dry, and it looks a lot like 2012. I don't know the technology behind it, but here's my take on this. And you hit the nail on the head. As I drive by beans, I cut through the country every day. I could drive kind of the same route. These beans just aren't growing. And if that truly is some sort of a satellite, imagery of, number one, it's measuring how much vegetation's out there, right? Well, if you have beans that literally you're still seeing dirt down the rows and they're knee high versus, last year they're chest high, right there, if it's measuring vegetative growth, you got at least 50% less vegetation in bean fields at this time of year than you did a year ago. And it's not going to get any better because the rows aren't going to close. You've got cornfields that are starting to kind of dry down and get a crispy look over here that you normally get, kind of late August into September, but it's too early for that, right? On this late planted stuff. So that's going to be lessening because, plants are kind of starting to dry down because they don't have enough moisture. And I don't know what it means to yield, but I'm not an agronomist. I wouldn't even claim to be that smart, but you put 2 and 2 together, and I don't know how we can expect these massive yields that the market seems to think we're going to have this year.
Right. No, it's. I don't know. I'm the same way. I hear what the USDA is putting out, and I hear what some of these independent people are putting out as far as yields go and stuff like that. And I'm not an agronomist. I'm just a guy with a podcast, and I tell you, it doesn't look like it's going to be much to me. So take it for what it's worth.
Yeah, and I know corn has fooled us before, right? I mean, you planted it late, but everything's gone. That's what people forget. It's like the times that you plant beans on June 28th and they make 55 bushels, it's happened. Right. You've planted corn on, June 10th and it's made 200 bushels. It has happened, but everything went right from the time they did that until the time they harvested it. And it's not like that. In fact, it's continuing to go wrong, right? It's dry. Just the conditions are wrong this year to have that anomaly of, everything's great. We planted corn on June 14th and, made 210 bushels and our beans were 60 and, we planted those June 24th and everything's perfect.
Yeah.
Just not going to happen.
Right. Yeah, it's a crazy year for sure. All right. So all the stuff that we have happen here in the corn market and the soybean market with just absolute uncertainty there, that's throwing some caution over onto the cattle complex, especially what we see happen in the last 2 or 3 days in the stock market and how it's kind of rallied and, ups and downs and the peaks that they've had. A lot of folks out there trying to source some silage right now, see an opportunity to get some silage or some of this late planted corn and some of the conditions we see out there. So the cattle market's been all over the place as well. It's been up and down, and same with the hog market's been limit up and limit down several times in the last couple of weeks. So talk about the protein complex and what you see happening there.
Yeah, so the cattle market is really kind of stabilized in here. I think the best can be said about cattle is we're building a nice sideways base here. We're, it'll rally $2 or $3. It'll sell off $2 or $3. We're kind of going sideways here, which is a good sign. I think the funds are mostly out of their long position. That's good. That means if you get some friendly news, we could start seeing, funds pour some money back in on the long side in cattle. So I think that we're in a good spot in cattle, but you need to see the cash market start rallying. And it's that time of year to kind of start seeing cash, not rally in a massive way, but at least start trending a little bit higher. And I think that could, mean a nice $5 to $8 rally in cattle. Obviously, the economy and the world economy, the cattle market kind of watches. The hog market, like I mentioned, is just it's a train wreck right now. We've had massive sell-off, heavy selling because of the lack of progress and the escalation of the trade war. And it's going to surprise you, right? I mean, right now it just feels like we're going to zero in hogs. China's not going to take any more pork, so they say. Although they were there on Thursday for a small amount, we continue to ship them fairly large amounts of previously purchased U.S. pork. But I think this inflation number out of China today and the unrest they have going on, you can only go so long, right? And, I think there's some things at work internally in China that eventually they're going to be, there's no question in my mind that they're going to have to import large amounts of pork from somewhere in the world, right? And we're the most stable, largest supply. So that may be way down the road. But I think this thing in China really could breathe some life back into hogs eventually. But right now, boy, it's just ugly. I mean, you don't need much of an excuse and hogs are limit down. really don't need any excuse. And it's been an ugly, ugly sell-off in hogs. But longer term, I think we're probably at a value area in hogs, but that doesn't mean we rally either. It means hopefully we can, kind of like we're doing in the cattle market, stabilize. Maybe we're slopping around here. Maybe you're still going to see some limit up, limit down days, but you kind of build a base here of maybe, $6 or $8 where we just go sideways, take a breather, and kind of, build for the next move higher, hopefully with some Chinese buying at some point down the road here.
Right on. Yeah, the whole China thing, they're right. They announced the other day that we're not going to buy anything else from China or from the U.S. and so on and so forth. But they're best friends with the South American growing countries, and sooner or later they're going to run out, right? And there's a finite amount of supply. It's not an endless thing down there anywhere. There's growing cycles that have to take place. So whether they want to or not, sooner or later China's going to have to come buy something from us, whether it's beef or hogs or corn or soybeans or whatever it is. They're going to have to come buy it from us. It might not be in the same amount that they bought in the past, and they may be just bridging that gap till the next Brazilian crop comes through or whatever, or the Argentine crop comes through, whatever it is. But they will have to eventually come buy from it. Because sooner or later, South American countries are going to say, we got to feed our own people too here, China. So we're done. We can't sell you anymore. And that's going to be a hard line in the sand that. And they're going to, obviously those farmers are going to be wanting to run that right up to that last possible minute that they can do that. So it'll be interesting to watch to see what happens.
That's a good point. And like back on the corn side too, sure, there, Ukraine and Russia have some corn for exports. Argentina, Brazil have some corn for export. If you look at a pie chart of what the total production and supply of corn is in the world, it's United States. And by the way, I think it's been pretty proven that the supply chain is probably the best of anywhere, and the quality arguably is the best of anywhere. But if you look at this, just the supply of corn in the world, and there's everybody say, Argentina corn is 35 cents cheaper than the United States. Okay, that's true, but they're going to run out eventually. And, when they do, where's the world going to come for corn? It's here. And, oh, by the way, in 5 months, my brain tells me that the total production on paper is going to be, less on corn and beans than it is currently. And then you get this panic, and, it's just a psychological thing. Hog market's the same way. And, interestingly enough, and I'm not an expert by any stretch on the logistics of, meat exports, there was a pretty healthy sale of U.S. beef to Hong Kong on this past Thursday's export sales report, right? So, yeah. And then, some of these countries, like some of these other Asian countries, their per capita beef consumption's, like 10 times what it is in the United States. So it's going to make it, whether it's actually China buying it or it makes 9 stops by the time it ends up in China, it's getting there one way or the other, and it's demand. No matter who buys it, it's demand. So it's coming, I believe, in the protein sector on the meat side.
Oh, absolutely agree with you, Chip. All right, Chip. Folks want to reach out to you and work on that plan, because right now is a great time to have that plan in place and be working that plan with all the volatility out there and watching what your margins are and what your break evens are. Folks got a plan they're working on or need some help putting one together. What's the best way for them to get a hold of you?
Yeah, best way is just call our office, 309-550-7213. Again, love to chat with you. A little bit of a lull here, ahead of harvest. So from a row crop operation standpoint, it's perfect time to be, building the plan if you don't have one, because things are going to get real dicey here. And obviously the livestock side is just a little more, it's busy all the time, but that's another reason to have a plan, because, when you get caught up and it's day to day out there busy, you got to have a plan. So we'd love to chat with you.
Yeah. And also working that plan, maybe call to tweak that plan a little bit, depending on what you see happening out there. So a lot of moving parts out there.
Yeah. A lot of people have, do the plan in the winter time frame, kind of doing some business planning, risk management plan. And that's great. That's a great time of year, but it's a perfect point, right? Things change, trade war going on. production changes both on your farm and, in the entire Corn Belt and the world. So yeah, it's a living, breathing document, and you have to update that and, have it front and center and be ready to tweak it. And then more importantly, once you have that plan, you got to execute it. That's the hardest part. The plan's the easy part. The execution is the hard part.
Right on. All right, Chip. Well, have yourself a good weekend, and we'll talk to you again soon.
Sounds good. Everybody fasten your seatbelts for Monday. It's going to be interesting.
Looking forward to it, man.
All right. Have a good weekend.
You too.
See ya.
Hello and welcome to Moving Iron Podcast number 147. Today my guest is Shawn Skaggs, and Shawn Skaggs is with Livingston Machinery down in, probably the western half of Oklahoma and over into the Texas Panhandle. Is that about right?
That's correct.
Okay.
Yeah, we're in western Oklahoma, and they're in the Texas Panhandle. We've got 4 locations that are spread out kind of in the corners of that area.
Right on. Okay, so you've had a kind of a just about like everybody else out here. You've had a pretty interesting year with your growers and what that looks like. So this fall you had some planting delays with rain and those kind of things, and rolled right into this spring with some more rain on top of that. So talk about some of the challenges that you've had so far this year and what kind of your customer response has been to those challenges.
Well, the big challenges that we've run into had to do with weather, just like with everybody else. We had so much rain back in the spring. We actually ended up getting about twice as much as our annual rainfall there in about a 3 or 4 month period. And so we've had tons of rain, lots of flooding like everybody's had. The big effects that it had on our producers are, number one, that they couldn't get in the fields, whether it be planting corn or planting cotton. They couldn't get in the fields in time to do that. Most of them still ended up getting some kind of crop in there, but it was all put in late. The other big effect that it had on us was trying to get some crops out of the field. So a lot of our wheat producers were planning on cutting their wheat for hay because of the way that wheat prices were at the time. They felt like they were better off to go ahead and put that into hay. And whenever they got an open window to go in there and cut hay, they'd go in and cut it and think that, surely it can't rain forever. But lo and behold, it did. It would come in and rain for 2 or 3 weeks after they get their hay cut, and it would just turn it into a big mess out there in the field, and they'd lose that entire hay crop or basically their entire wheat crop by doing that. We also had a lot of producers, alfalfa producers that would go in and they basically lost their first cutting and some of them their second cutting as well because of all the rains and just being delayed. And it just seemed like it would never stop raining there for a while. And then whenever we got to the end of that rainy period, we've now had enough consecutive days without rain and with lots of heat and wind that we're back into drought conditions, even to the point that a lot of our producers have planted some summer crops that never even germinated, never came up because we couldn't get them to enough moisture. You couldn't plant deep enough to get to moisture, which is something that I certainly never expected. I thought we'd have enough moisture to last us for 2 years, but
right.
Not the case.
Yeah.
And so that's been a challenge for them. But, the way they've responded to it is a lot of them have went out and purchased hay equipment because hay is the one thing that they can go out and, kind of produce immediately and create some revenue. With all the other challenges that they've got facing them right now, they need to create some cash flow. And one way they can do that is to go out there in those grass fields and cut some hay, bale it, and then they've got something that they can sell. In fact, we've seen people that are basically windrowing the bar ditches. They're baling up everything they can find right now, and they're also pushing those machines a lot harder than what they normally do because they've had such a narrow window and because they're trying to get so much done. And so that's really driven our parts and service business as well.
So as you take a look at what we have coming down the pipe here, so you look at kind of right now moving through the end of the year, cattle prices have kind of bounced around all over the place. Obviously, commodity prices have bounced all over the place. Seems like wheat bushels have been good. Protein seems to be on the lean side this year. So I guess when you look at those kind of things out there, do you feel pretty positive about moving towards the end of the year above and beyond what you see happening in the hay market, or do you feel like there might be some negative repercussions here of kind of some just various word I'm looking for here, various things, kind of headwinds and stuff that we're running into?
Well, I mean, right now, we have no reason to believe that it's not going to still end on a positive note. Everything still seems to be going positively, even beyond our hay sales. Our tractor sales have been up over the last couple of months, really surprisingly so. And so right now, it looks like everything's going to be positive going into the fall. But I'm like you probably are too, Casey, I'm just kind of waiting for that other shoe to drop, because they do have so many challenges that they're facing. And we all know that, all it takes is the wrong tweet or who knows what to kind of send this thing tumbling. And so we're kind of trying to stay really cautious and be prepared for that to happen. But we've got great momentum going into the fall, and so we're hoping that that's going to carry through. One of the things that we did to try and make sure that we were ready for this is we positioned ourselves, sort of our inventory position, we positioned ourselves really well. We've actually, thinned out a lot of our aged inventory, and our inventory is actually running really lean right now, but we feel better about running lean than we do running heavy, even though there's a lot of opportunity at the moment, just because, like I said earlier, we're just kind of waiting for the shoe to drop, and whenever it does, we don't want to be caught with a lot of inventory on hand that we're going to have to sit on for a long time.
Yeah. Now, I think, both you and I were at the Dealer Mind Summit, and we were, I'm sure we had plenty of conversations to have with a bunch of folks out there, and a lot of the same stuff you and I just talked about here. I mean, I think I'm in the same camp as you are. I'm cautiously optimistic about what happens towards the end of the year and what all that looks like. You just take a look at the grain markets right now. I mean, holy crap, it's been it's talk about a roller coaster ride. And over the last 3 weeks, we had this run up to, corn, for example, run up to corn on December contracts up there at 450, 452 on the board. Basis prices have been really aggressive here of late. So, you start looking at some marketing opportunities earlier this year between 415 and 425 in a lot of places. So that was a great deal. But today's market, I mean, it's bouncing around $4. So we've lost about 52 cents, 50 cents, something like that over the course of the last 3 weeks. Wheat's been doing the same thing, kind of bouncing around. Cattle have been doing the same thing, kind of bouncing around. There's just so much volatility in the marketplace. It's either going to be really, really, really good or really, really, really bad, and I feel like there's not going to be a lot in between. So when you're talking with your growers out there and your producers out there, what kind of sentiments are they giving you? Are they giving you like, hey, we kind of feel positive about what's going on, or is it more that kind of cautious optimism?
I think most of them are in the camp of cautious optimism. I mean, some of them have still, through all the challenges, have had a pretty good year, but they know that the whole thing is just pretty fragile at the moment as far as the ag economy goes. And so they're pretty much cautiously optimistic. A lot of what's driving them to replace things is just, the fact that they've got a lot of aged machines out there.
Yeah.
There are a lot of producers that normally would trade machines every year or every other year that have now been sitting on their machines for 3 and 4 years, and they're just at the point where they want to go ahead and replace because they don't want the breakdowns. They're afraid of what's going to happen or what kind of crops they could lose if they had a failure with their machine. And so, that replacement cycle has really been a driving factor. More so than what I expected. Yeah. People are really active out there as far as replacing some of the things that they haven't replaced for a long time. Tillage equipment is another great example of that. We haven't seen very much activity on tillage equipment over the last 3 years, but all of a sudden we've got a lot of activity on tillage equipment and even on some seeding equipment again.
Yep. I will echo those sentiments, man. I'll tell you what, you take a look at what's getting traded in right now, and we've talked about it on there several times, and it feels like everyone's kind of trading in the same thing. They've got, hour ranges and the machines they're trading in and things like that. So I have my concerns about what that looks like coming in towards the end of the year and what that does to the markets and those kind of things as far as used equipment go. But you're exactly right on the tillage thing, man. There for a while, it was just we couldn't give away a piece of tillage new, and now we're looking at guys that are really showing up and looking at some different stuff. And I think a lot of guys that we talk with that we have out here are really starting to adopt the high speed farming, I guess is the best way to put it. Whether it's tillage or planting or whatever. They're trying to do as much as they can, as fast as they can, and that's really starting to creep into our kind of lexicon here at out here, and we start talking with customers. So, are you seeing a similar pattern where guys are looking at bigger, faster machines, or have you felt that pressure yet in your area?
We haven't really felt a lot of that pressure yet. I mean, we are, like everybody, we've got a lot of people that are moving more and more towards the vertical tills and some things like that. And there's a few of those high-speed machines that are creeping into our area, but it's not been as much. I hear a lot about it from the guys up in the Midwest, and we just haven't heard that same kind of activity on those machines down here. Now, it may be coming. We all know tillage is a very trendy product, so whatever the trend of the day is what's going to be hot for a few years. But I don't think we've seen it as much down here as what they have in a lot of places north of us.
Yeah. No, I think there's the high-speed discs are the one thing that I think are going to be something to pay attention to. And it's years like this that we have, whether it was the fall or whether it was the winter or planting season or whatever it was, when there's always a stressed time window to get stuff either out of the field or in the field, the demand for, next year I'm definitely buying the high-speed disc, or I'm buying that, or whatever it is that could have made it easier during that window they had, and we're starting to see that. So, planter sales, I think, are up kind of across the board everywhere, in certain pockets and maybe even nationally, but a lot of that stuff is getting switched over to that high-speed thing. So it'll be interesting to see how that plays out through the end of the year.
Yeah, that makes a lot of sense. Let me ask you, Casey, because you're the expert here on used equipment and inventory management. I mean, like you were saying earlier, we're seeing a lot of the same machines being traded in, right? The machines that are all in the same age range and the same hour range. What are some of the things that you're doing to try and plan for that, to make sure that you don't get caught with way too many of the same machine?
Yeah. Well, I appreciate you calling me an expert, but I'll have to step out of the room and get the expert to bring him in here, because I'm kind of fumbling my way through this myself. But so when I look at this, combines are one of those things that I think are on everybody's mind, and there always are. If you're in a combine market area, you sell a lot of combines. Used combines are always a top of mind piece of equipment. When I look at those and I see where they're at, I feel like the market has kind of hit that saturation point, because when you look at auctions, for the most part, they're pretty consistent. They've been that way for the past 2 or 3 months. They've been pretty consistent about what the auction value is, and no one's really arguing it, right? When someone comes in, you can always tell when you've hit a new high or a new low, because when you come in and say, hey, this is the value, farmers always argue with you about your value, but at the same time, you can tell when they've kind of accepted that value, because they don't argue as much or as hard. And I think we've hit that point. So it tells me that auction value for 12, 13, 14 model combines are pretty much where everyone thinks they should be, right? What are we trying to do to offset that? And we talked about it out there at Dealer Mindset. I think just the easiest way to do it is you start looking at what are your top units you got to get rid of, and you start building programs around those programs. I have my reservations about the auction market moving towards the end of the year and what that looks like. There could be several of those machines that get pushed into auction just because of the number that are getting turned back in right now in trade, and what that looks like. I think you could see a dip in there, and there could be a bit of a balloon popping, I guess, for lack of a better term, when you look at that. But that's all speculation to this point. So there's been an accelerated amount of inventory on the marketplace for the past 18 months, and in that specific hour range, that 15, whatever you want to call it, 1,250 separator hour combine up to that 2,000 separator hour combine. There's been a fair amount of those on the marketplace. So, and that hasn't really changed. They haven't grown and they haven't shrank. They've just kind of been there. So that tells you that there's something going on in that area. So I have my concerns about the end of the year and what auction value looks like. But the same hand, I always have a concern at the end of the year what auction value looks like, because that's the peak time that stuff gets put on auction. So it'll be interesting to see how it plays out and how it moves. I'm still waiting on the Navy to get back to me. I got a self-propelled anchor program I'm trying to implement with them, but they haven't responded like I thought they would. But so hopefully that'll go through. But I don't know. I think it's just kind of a wait and see thing. I think you have to really kind of measure what you're doing and see where you're at and make those decisions moving forward.
So, just talking about managing inventory there, I mean, do you kind of look at your historical sales and see what kind of capacity you've got for those kind of machines and put a cap on the number that you're going to crate for? Or can you even use historical sales after the last, 4 or 5 years that we've been through to tell you very much of anything right now?
Yeah, I think we've been consistent over the last 3 years. Within an acceptable range anyway of the number of used combines that we sold. We've never really been really high or really low comparatively on a average scale. So I think we can take a look and easily see where we're going to be at. I don't really think, if anything, we're going to go up this year in used combine sales more than we'll go down. I think we have a better probability of selling more than we did last year, just because of the market conditions that we're in and what we're seeing happening. But to your point, if commodity prices continue to do what they're doing, my fear is that, again, towards the end of the year and then that buying cycle and what that looks like, we could have a mad rush to the door to come in and buy stuff at the end of the year, because now all of a sudden we're starting to see that jump. The August crop report is going to have such a huge deal in what happens with the overall market conditions moving forward through the end of the year. I mean, if that thing comes in and it says, "Oh, nope, we're right," everything got planned like it should have been planted, and there's the prevent plant wasn't what we thought it was going to be, and that's going to be so much volatility to the downside. We'll probably be worse than where we were at when this whole thing started. But if it's the flip of that, and you start talking about some guys out there that are talking about 78 million acres of harvest, and the planted acres are 81, 82 million and stuff like that, that's a huge swing from what the USDA is saying. So if you factor that in to what's going to happen, and that actually comes out to be the way they see it, you're going to see some upward trend. And hold on to your pants there, because it's going to take off and run. So managing inventory for us, kind of to answer your question here, to manage that inventory for us, we got to make sure we have the machines priced correctly moving into this buying cycle that we're going to start seeing here. I mean, here it's August 1st, so this is one of our peak. From now through the end of the year, you start to see that ramp up of what that looks like. So we're definitely going to make sure we got things priced correctly. We're going to make sure that we have any hanger-ons out there, that we take care of those things and cut those safety lines on those machines and move things forward. So it's a multifaceted inventory management strategy that you have to have. One, looking at what you think is going to happen at the end of the year, and then what's your overall goal? How are you going to increase your turn, and how are you going to increase that cash flow into your dealership? So I think that's what we're looking at now, and move and make sure that we've got the right mix of machines in the right spot, and then the excess stuff, what are we going to do with it? And that's where we're at focusing right now.
Yeah, and I think the last thing you said is something that's really affected us over the last few years, is having the right mix of machines. Our biggest problems weren't necessarily the machines that are the bread and butter for our area. Our biggest problems were typically the machines that we took in that either weren't the right mix for our dealership in particular, or weren't the right mix for our particular area. Those machines that were just a little bit of an oddball throughout the last few years, whenever our producers have been in a cash flow crunch, those machines all of a sudden are a really big oddball.
Yep.
And they're really a fish out of water and a problem and hard to move. So that's one thing that we're trying to do a lot better job of, is not end up with those oddball pieces.
Yep. And I will say this, I think one thing that we do, I have a gentleman that works for me, and he measures all kinds of stuff for me. And one thing he does is we track on the internet in each machine category, whether it's combines or row crop tractors or four-wheel drives or whatever it is, the number of units by manufacturer in an hour range, right? So from 0 to 300, how many, John Deere 4-wheel drives and New Holland 4-wheel drives and Case 4-wheel drives. How many 4-wheel drives are in that mix, and what does that look like? So if there's 1,000 machines that are in that mix, how many of them are 0 to 300? How many of them are 300 to 500, and so on and so forth down the line? And it starts to paint a pretty big picture of what that looks like. So you can kind of guess when you start seeing machines that got 5, 6, 7,000 hours on them. You can kind of get a rough guess of what year those are when you start doing the math of typical hour a year type of stuff. Same with combines, same with row crop tractors, so on and so forth. And we start looking at that market segment as a whole, and then we compare it to what we see happen in our inventory, and then we start making decisions on kind of back to that product mix. It's not necessarily the number of units that you have, but it's what you have that's a desirable amount of a desirable machine, whether it be like a combine, for example. How many machines do you have that are under 500 hours? How many machines do you have that are between 500 and 750? And how many do you have that are 750 to 1250? And then you start comparing that mix to the mix that you're tracking out here on a North American grand scale, and where do you fall into that at? And for the most part, it's the same reflection that you see out there. People are trading in on the heavy side of the higher hourage side, and they want the lower model or the lower hourage stuff out there. And that's where you got to figure out that mix and what that mix needs to be, and how are you going to place yourself in the marketplace. And then the stuff that you can't sell, you got to start making some pretty tough decisions about what it is you're going to do with those pieces. And that's the discipline and the art of used equipment, I think.
Yeah. Well, and that brings to mind something else that we've seen over the last few years, and you can tell me if you guys saw the same thing. But for a long time, the best piece that we could have on the yard was a really low-hour, late-model machine. It doesn't matter what you were talking about. If it was low-hour and late model, those were great machines to have. They moved really fast. And then whenever the bottom fell out of the market a few years ago, that completely shifted. And all of a sudden, those machines were really hard to move. And some of your higher-hour 4- and 5-year-old machines were actually kind of all of a sudden the really desirable machine, and we're starting to see that shift again, and now all of a sudden that low-hour, late-model machine has become a really desirable machine again. Have you seen kind of the same thing in your area?
Yeah, we're seeing the same thing. I think that, row crop tractor under 1,000 hours is a pretty desirable piece. 500 hours or less, too, is even more desirable, I think, in a lot of realms. But yeah, you're right. I mean, there was a time where I'll give you a good example. Some of these, like for us, like a 9770 combine, for example, first 3 months of the year, we could have sold 1 million of those things, I think, if we had them sitting on the lot. And here of late, now that commodity prices have kind of come up a little bit, and there's a little more certainty in the marketplace, a lot of folks are looking at the S-Series combine, older S-Series combines as that secondary combine or that backup combine, or they're trading their 50 or 60 series combine in and moving up to one of those, because realistically they're not that far away on price when you start really looking at the nuts and bolts of what you see out there. So yeah, there has been a definitely a move in, I think, in appetite, of what flavor they're looking for out there right now. And it's definitely moved towards the lower hour end of that.
Yeah, that's what we've seen is, and it's like you said, they're seeing a little bit more stability in the market. And I don't even know if it's as much stability in the market as it is stability in their own operations, where they've figured out where their expenses have to be profitable now, and they've been able to have enough time to make those adjustments. And so now they have a better feel for exactly what they can spend, I think.
Yeah. And I think so, too. I mean, you take a look at a lot of these guys, too. There's opportunities to grow out there right now that weren't there 3 or 4 years ago, with retirements and guys just flat out not getting financed and those kind of things. There's a lot of opportunities out there for some guys that have positioned themselves very well over the last 3 or 4 years and being conservative about their cash flow and those kind of things, that now they have some opportunities to grow. And I think we're seeing that in our area. Are you seeing that down there in your part of the world?
Yeah, absolutely. Yeah, there's a ton of consolidation that's going on. We've got a lot of older producers that are trying to figure out a way that they can get out, whether that be leasing their land to their neighbor next door or, farm sale or whatever. We're seeing a lot of consolidation out there, and it actually, has had us really worried about the used equipment market, because we'd seen for the last few years a slow decline in our used equipment sales. And so we were seeing that and seeing all the consolidation in the market and thinking these guys are just getting bigger and they're going to have more new machines and they're going to move further and further away from used. So what do we do with used? And then this year comes along and all of a sudden, we sell almost everything used we had on the lot.
Yeah.
And, cleaned up a lot for us. And we did a lot to be prepared for that. But at the same time, a lot of it was just sheer luck. The market changed in our favor in that regard.
Yeah.
And so we were able to clean up a lot of that used. But I still, over the long term, I wonder what kind of effect that's going to have on the used market and how we're going to have to shift over the next 10 years in order to deal with all the consolidation that goes on. Because whenever there's no, small and mid-sized guys left out there and it's all the big guys, then it's going to make it pretty tough to move some of those used machines, especially the ones that are in that 4 and 5 year old range.
Yep, absolutely, and that's one of my biggest concerns we have as well. We've got farmers in our area that have grown considerably over the last 3, 4, 5 years, and you look and see what land they've taken over, or who's retired, and those kind of things, and unfortunately, a lot of guys that they're now farming their land, those were the guys that were also buying that guy's trade-in piece, and so now we're up against that. And to your point, I think you got a valid point there, and I've talked about it. Aaron and I have talked about that. excuse me, pretty extensively here the last couple of years. And my used equipment manager Chad Pratt, we talked about that quite a bit too. That what's it look like when you start taking and you're stepping back and looking at, okay, so now we've got a guy that would buy 1 or 2 of these used pieces, and this guy would buy 1 or 2 of those used pieces, and he'd buy one, and he'd buy one, and he'd buy one, and we had pretty good flow going there. What's that look like? And the other thing we're starting to see in our area is as machines are getting bigger, implements are getting bigger, and hydraulic demands are starting to get higher, and just the overall size and weight of what you're looking at. I mean, you start pulling around a 60-foot air seeder and a 600 or 700 bushel cart behind that. I mean, just the horsepower you need just to make the thing move is one thing. Then you got to add the hydraulic demand on top of that. You start running into some different machines than you would normally see out there in the marketplace, and then that creates a whole nother animal of, well, what's a secondary or tertiary market look like for a 60-foot air seeder and a 700 bushel cart? Those are some questions you got to start asking, and who that person's going to be. So there's a lot of balls up in the air right now that are, when they drop, it's going to be amazing to see what that bounce looks like.
Yeah, that's something that we've definitely seen as well. And usually it happens for us more with kind of the specialty machines that we've sold over the years. But, definitely there's some machines out there that you're going to sell new to those guys that are huge or that are custom operators. They're running those machines 24 hours a day.
Yep.
But that mid-sized guy who would be the next step in kind of the train of that machine's life, they have no use for a machine that size.
Right.
It's just too big.
Yep.
And so then you got kind of this albatross, and even though you try and explain to the customer up front, this machine is not going to have a great resale value. It's going to do a great job, and it's going to perform, and it's going to have enormous capacity. But whenever you get ready to trade it in, be ready for a high operating cost. Mm-hmm. But everybody still comes into that situation thinking, oh, well, that may be how it is for everybody else, but it won't be for me. And so it's a tough situation to deal with. Yep.
It'll be interesting to see. The next 5 years of agriculture, especially on the equipment side of the business, are going to be interesting to see what they do, just because of, we're still farming the same number of acres. We have some loss out there to some housing developments in urban areas and those kind of things. But in rural America, in the heart of rural America, we're still farming the same number of acres, whether it's crop production or cattle production or hog production or whatever it is. We're still doing that, but it's under the size of that farmer is getting bigger, and the more acres are covered, and the more cows they got, and those kind of things. So it's going to be exciting to see what happens. I'm looking forward to it. I think there's going to be a good challenge out there, and I think every day we take that step closer to what kind of we're resembling and starting to kind of morph into what we see happen in the construction side of the business, where it's just it's a per use basis. There's you speak to this, Shawn, a little bit, but my opinion of how guys are viewing their equipment right now, it's not the same way it was, 20 years ago. It's a tool that I'm using on my farm to get a job done, and there's not that emotional attachment out there that we used to see, 10, 15 years ago. It's starting to kind of morph into a different mindset. Would you agree with that?
Yeah, I would, and I think some of that has to do with almost some cultural changes or some generational changes. That's one thing that I've seen as some of these. We I know in our area anyway, there was kind of a generation skip. It was really more my generation skipped in the ones that went back to the farm. You had a generation of guys out there that are in their 60s right now, and you've got a generation of guys out there that are in their 30s and younger out there. But that generation that would have been in their 40s and early 50s, there's not very many of those guys out there farming in our area. And that whenever that generation that's in their 30s now came back to the farm, they don't have the same kind of attachment to those machines that the other ones were. They're looking at it more from an economic perspective, and they're analyzing it, like you said, as a tool that they're going to use to get a job done. And really, I think that generation does a really good job of seeing kind of the big picture of what they're going to do and making decisions based more on the big picture and making more financial decisions than emotional decisions that we might have saw from some of the previous generations.
Yep. Yeah, it's they're measuring depreciation and overall cost per hour and all of those things are getting weighed. Not that they didn't get weighed before. Don't get me wrong. I'm not saying that. But what I am saying is that they're really diving into what that metric looks like, and they're really cutting out what needs to be cut out and putting back in what needs to be put back in. So I think there's like any generational change that you see on the farm, there's always a new mindset that kind of comes into play, and then how we adjust to that from the industry side is always a challenge, but it's also a fun challenge because you also change your business, and you also change the way you do business and how you approach your customers and those kind of things. So I'm looking forward to it. I think we're going to have a fun next couple of years here, and what that looks like, especially with autonomous tractors and working on more automated things on the farm, whatever it might be. So I think it's going to be a fun next 5 years.
Yeah, I love your attitude on that. It's not a problem; it's a challenge, and overcoming that challenge is going to be fun. We're going to learn, and we're going to grow in the process.
And it's like anything else, growing pains always suck. They hurt. There's always something there that changes, or you misstep on something, or you miss this, or you miss that. But at the end of the day, hopefully at the end of the day, you come out and you come out as a better organization, and you move on to the next challenge and start looking at the future. So it's going to be fun, man. Looking forward to it.
Absolutely.
All right, Shawn. Well, I think we've solved most of the world's problems here. So anything else you want to throw out there before we close this episode of the Moving Iron Podcast down?
Nothing else that I can think of that I want to throw out there. I just hope everybody has a really good fall and winter, and this ag economy starts to solidify and get back on the rise.
Right on, man. Well, Shawn, if folks want to reach out to you and ask you some questions or pick your brain about what might be going on, what's the easiest way for them to contact you, and also maybe check out Livingston Machinery?
Well, the easiest way to contact me is either you can email me at skaggs@livingstonmachinery.com. You can check out Livingston Machinery at livingstonmachinery.com, and don't be afraid to reach out to me on LinkedIn. That's about the only social media place that I'm really active, but I am active on there, and love to connect with you on LinkedIn.
Right on. And Skaggs is Skaggs, 2 G's. So, Shawn, thanks for being on the podcast, man. It's always a pleasure to talk to you, and I'm glad I had an opportunity to catch up with you at the Dealer Mind Summit.
Yeah, absolutely. Always a pleasure to talk to you as well, Casey.
All right, Shawn. Take care of yourself. We'll catch you next time.
All right. Thank you.
Thanks for listening to this edition of the Moving Iron Podcast, now part of the Global Ag Network. If you'd like to continue any of these conversations, you can hit me up on Facebook, Twitter, or Instagram at Moving Iron LLC. You can also send me an email at movingironpodcast@movingironpodcast.com. You can also visit the Moving Iron Podcast YouTube channel and watch Market Roundup with Chip Nellinger, Sean Hackett, and Angie Setzer. Also, Tax News with Glenn Birnbaum. Please visit movingironllc.com. Here you can find information, details, and updates for the 2019 Moving Iron Summit in Nashville, Tennessee. If you'd like to support the podcast, you can leave a review and subscribe at iTunes, Google Play, Stitcher Radio, TuneIn Radio, SoundCloud, and globalagnetwork.com. So until next time, let's go move some iron. This is Casey Seymour. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving